Good morning, current and potential DeFi degens. I am Mike, aka Veteran Crypto, and this is David, aka DeFi University. How's it going this
Yeah,
morning, brother?
basically. Outstanding, Mike. Doing well, man. How are you today?
I'm doing great. I'm doing great. Had a great show last night. I drank a little bit of wine, and we talked about some topics, and yeah, it's always a good time on the red pill. So, yeah, as usual, got up at 4 or 5 in the morning to do the newsletter, and unfortunately Taylor is at my nephew's, another one of his competitions. They're huge into, like, the whole family. He has like a bunch of kids and his wife and him, and they do jujitsu and travel around the world and compete. My nephew is a state champion wrestler.
Wow.
And he actually applied to do wildland firefighting up here this summer. And so I talked to a couple of my buddies about getting him on, and his whole family are beasts. I mean, they have a whole wall before their house burned down. They had a massive wall, and it was just covered in, all the different medals and trophies and stuff that they had won. And so
That's
anyway,
awesome, man. That's super
long, long,
cool.
long story short, he's
Yeah.
he's at another competition, so he wasn't able to do his part of the newsletter. So I had to send it out.
Oh no, you froze for a second there, Mike.
Oh, it's all good.
It was
So,
Elon.
oh yeah, fucking Elon, that
I
guy.
know, fucking Elon.
He's always cutting me off. But well, let's go ahead and jump into this. We always end up going right up into the end, and I want to make sure that we get as much alpha out there as possible.
Sweet, man. So this is what I want to run through today. Let me go ahead and share my screen here. And Mike, I got to get used to this StreamYard software because last night when I was closing out my trades,
Yeah.
I was short. I was closing that stuff out, and I wanted to do it live, but I forgot to add to the stage the screen share. So I
Oh,
share my screen, but I didn't add it.
yeah,
So,
yeah.
so I'm thinking that today, because of the wild ride that we've seen in markets, it's probably a good idea to, go over a little bit about managing fear and greed. So I was thinking that this could be valuable. This is again, from the investor mindset course. So this is actually just lesson 3. And this stuff is totally free. It's at courses.defiuniversity.xyz. So I think this is probably going to be valuable for us, given that markets have basically been, like, over the last 48 hours, down 10% and then up 10%. So,
Yeah.
it's been a roller coaster. How do you manage fear and greed during such volatile periods in the market? Well, let's go ahead and play the content. Let's see what it says.
All right, let's be real. If you're a trader, you know that feeling in your gut. The market is an emotional roller coaster, right? Well, what if I told you we could flip that script? Today, we're diving into how to turn your biggest liability, your own emotions, into your single most powerful asset. Let's get into it. This quote from the legendary Jesse Livermore, it's over 100 years old, but man, does it hit home. He nailed it. The real fight isn't against the charts or the news, it's inside you. It's that constant battle with fear, with greed, with hope. These are the enemies he's talking about, the ones that are always working against you from the...
Okay, so the 3 emotions there are fear, greed, and hope. You have fear when a position starts going against you. You have greed when it really starts working in your favor. And you have hope when something went against you and you hope that it gets back to break even. Those are the 3 ways that you don't want to let your emotions influence your decision-making process when it comes to trading.
inside. Okay, but here's a wild thought. What if we've been playing this game completely wrong? What if those enemies, what if they could actually become your secret weapon? I know it sounds crazy, but that's the big idea for today. Instead of fighting your emotions, what if you started listening to them? I mean, really listening. Not as a command to panic sell, but as data. All right, section 1. So let's really dig in and name the enemy. How exactly are our emotions screwing up our trades? So here's the crazy part, the cruel irony of it all. The emotions that are literally hardwired into our brains to keep us alive, fear, danger, go get resources, those same emotions are a disaster in the market. It's like your survival compass goes completely haywire. It points you in the exact opposite direction you should be going,
Right.
every single time. And just look at this. It's almost beautiful in how perfectly destructive it is. Fear whispers in your ear, get out now, take that tiny profit on a winning trade. Meanwhile, greed, or its sneaky cousin hope, tells you to hold that loser just a little longer, it'll come back. It's this perfect storm, right? Fear makes you sell the bottom with pinpoint accuracy, and greed gets you to buy the top with total conviction. They're a tag team designed to wreck your account.
So, Mike, I don't know if you've ever experienced this, but I certainly have, where you see something moving sharply lower and you're holding it, and rather than buying on the way down or at a bottom, instead you do the exact opposite and you capitulate, and you're almost always able to nail the bottom when you end up selling. Finally, you end up like bottom ticking the bottom, and then the same thing on the top, on the way up. When things are ripping higher, it's so easy to just, go along with the herd, experience FOMO, and buy these big green candles. And usually when you do, you've got all of this conviction that you're right, and you're never right. So, oh man, it happens in both directions. So that's why you need to be a bit of a contrarian. So, there's a really good contrarian is called a Cassandra. So, Cassandra it's like a Greek myth, I think, or maybe a Roman myth. I think it's Greek. But it was basically like this daughter of a king. She could see the future somehow, and her father wanted to go out to this war, and she saw that her father would lose and get slaughtered, and she tried to warn him, and she was the contrarian saying, no, don't go. And he ended up going, and he did. I think he died, and she was warning everyone. And so now a Cassandra is a contrarian. So you want to be the contrarian here. When things are ripping higher, you want to think about, hey, maybe I should be selling into this. When things are dumping, you want to think about, well, maybe I should be buying into this. And with these massive moves that we've seen over the last 48 hours in digital asset markets, it's like, man, this that move yesterday, the flush out on the bottom, maybe you think about buying Bitcoin at its 200-week moving average. I'm actually thinking about selling it as the bounce continues. So
Yeah.
I don't think that the bottom is necessarily in yet, because I think it's too early in the year. I think that February is too early for the bear market trough to be in for Bitcoin.
Yeah.
So that's why I'm looking at it thinking, okay, well, on the bounce, I didn't actually buy the bounce last night. I probably should have. I tried to, but I set my stop a little bit too tight. So I got stopped out for like $1 profit or something. But yeah, man. So I'm thinking on the bounce, I probably want to be a seller when it gets a little bit higher, like maybe into the mid 70s. Maybe it gets into the mid 70s over the weekend, like 77K, something like that. Might be a seller up there. We'll see.
I'm kind of enjoying, for me personally, I mean, instead of having to buy in with fresh capital, that's what I love about DeFi is, with using different DeFi, you're just kind of DCAing, and getting free crypto for just holding your assets. I always, see people, and if you have the capital and, disposable income to do that, it's great, if you want to DCA into good solid projects. But for me, I mean, I kind of, for the most part, stopped buying new crypto. I just use my bags to earn more and do very, very low risk plays that I'm always talking about, the full range pools, the lending, staking, things like that, and just keep growing my bags. It's a lot slower, than doing ranged, and doing leverage and looping and things like that. But it's it's a marathon for me. My portfolio, I look at it as a marathon, not a sprint. So
Yeah, no kidding. It really is a marathon. And that's why I think about my portfolio in basis points, because I'm not trying to make, 5 or 10% in a day. I'm trying to do, if I can do 50 basis points in a day, that is a phenomenal day. So yeah, I just think in much, much smaller increments, and I take much, much less risk than I used to.
So easy to just write this off as, oh, I had a bad day, I was feeling emotional, but let's stop doing that. Let's reframe this completely. These are not just feelings. They are financial transactions. Every single time you let fear or greed make a decision, you are executing a trade with a real, measurable cost attached. Okay, here's where the rubber meets the road. I want you to actually do this. Go back through your journal. Calculate it. What was your cost of fear last quarter? How much did the greed tax cost you? Because the moment you put a dollar sign next to it, it stops being this fuzzy psychological thing and becomes a line item on your P&L.
So this is where a journal comes into play. It's really, really important just to take pen to paper and write down what was the cost of fear last month?
Mhm.
What was the cost of greed last month? And to reflect on your operations in DeFi and crypto, or maybe your trades, but just reflect on that and put a dollar figure to it so that maybe you don't make those same mistakes again. It's all about learning from mistakes that you've made, not beating yourself up, having some positive self-talk, saying, hey, you know what? I can get this. I'm going to go ahead and I'm going to learn from those mistakes I've made last month so I don't repeat them again this month. It's just about, yeah.
Well, it's important, I mean, we all make mistakes. We all slip. We all don't, stick to our plan. We don't stick to our schedules, things like that. And you know what? It's okay. It's all about recognizing that, kind of gathering yourself, admitting that, hey, you know what? I messed up. Journal, you do whatever you need to do to learn from it, turn it into a learning experience and move forward. Failure doesn't have to be a negative thing. Making a mistake doesn't have to be a negative thing. If you don't learn from it, if you don't grow from it, that's another story. But it's important that, that you learn and turn that, negative into a positive.
You gonna learn.
You're gonna LERN or how
L-E-R-N. You gonna learn.
the learning center or the Leering
Yeah.
Center,
You gonna
LEAR.
leer.
Yeah.
So much leering.
Yeah,
Yeah.
so much leering here.
It's a business expense, and you've got to get it under control. Okay, so this brings us to the big paradigm shift. What if emotions aren't enemies at all?
So, dude, emotions are data. They really are, because what I've learned about the way that my body reacts to trading and to risk taking is that if my position size is too big or I'm using too much leverage, there are certain things that my mind does that my emotions do, and that's data. That tells me, hey, maybe I'm trading a little bit too big here, or maybe I'm using a little bit too much leverage, or maybe I'm just wrong. And my emotions are telling me, hey, you got to get out. You got to get out. So that is data. That is really valuable data. And now look, granted, I've got over a decade of experience and it's like kind of ingrained in me now, but you can learn this stuff. Anyone can learn this stuff. And your emotions are data.
What if they're just data? This right here, this is the whole game. An emotional data point. That feeling of fear rising in your chest, it is not a command to sell everything. It's an alert. It's a flashing light on your dashboard that says, hey, pilot, your internal systems are running hot. Think of it like the RSI on your chart hitting 80. You don't just blindly short the market, right? No, you take note. You say, okay, things are getting extended. You use that data to make a systematic decision, maybe tighten a stop or take some profit. You don't just slam the eject button.
So if emotions are data, how do we read them? Simple. You build yourself an emotional dashboard.
And listen, this doesn't have to be complicated. Look at this. It's a simple 2-minute scan you do before the opening bell, before 1 cent of your capital is at risk. You give yourself an honest rating on these key metrics, and suddenly you have an objective score. You know what the internal weather is for the day. Are you clear-headed and ready to go, or are you, frankly, a danger to your own account today?
Right. So you could actually find out for yourself if, hey, if your fear level is super high, you probably shouldn't be trading that day. If
Mhm.
same thing with your greed level, if that's super high, you might want to step away from the screens for a little while. If your clarity level is very, very low, and yet your confidence level is super high, well, that's not good. you know, that kind of means like, you
Blind
found,
confidence.
yeah.
You don't want blind confidence.
Yeah, it's kind of like you went on X and you saw a post about like some new project, and the influencer was saying, "Oh yeah, it's going to the moon," but they didn't give you any information about it. So your clarity level is super low, but you've got all this FOMO and all this confidence for no reason. And
Well,
that happens.
confidence is just another emotion.
It is.
It's like it's okay to have confidence, but it needs to be built on a foundation of facts, logic, fundamentals, all those things that just like having an opinion about something. It's yeah, you can be confident as shit, and have speak what sounds to be very intelligently about something, but if it's not based in fact, you're going to get picked apart by somebody who is knowledgeable about that subject. So confidence is one thing, but informed confidence is a lot better.
Yeah, they call that Dunning-Kruger, the
Oh, yeah,
Dunning-Kruger
the
effect,
Dunning-Kruger
right?
effect. Yeah.
Yeah, where like if you know just a little bit about a topic, then
Mhm.
you might be much, much more confident than you should be speaking about that topic.
Go on
But
social media. There's no shortage of it.
but then once you actually start to know a lot about a topic, that makes you actually doubt what you know about that topic. It's so funny. You know a little bit, you think you know everything. You
Yeah.
know a lot, you think you know very little. It's
It's really weird that how that happens is you start to when you first start to learn about something and you're just like, oh yeah, I'm very knowledgeable about this, but as you dig deeper and deeper, it's like, oh shit, yeah, I didn't know that aspect or that aspect, and yeah, it's
yeah, there's always more leering to do.
And then, and this is the critical part, you connect that score directly to action. It becomes a simple if-then system. If my score is in the danger zone, then my position size is cut in half. Period. No negotiation. It's brilliant because it creates this automatic circuit breaker between your worst impulses and your trading account.
Okay, that's great for the pre-market, but what happens when you're in a trade and things go sideways? What about those emotional spikes during the day? Well, that's where your playbook comes in.
Step one is always diagnosis. You have to get good at recognizing the symptoms as they're happening. Is your stomach in knots just watching the price tick? Yeah, that's fear. Are you already mentally spending your profits on a trade that's still open? That's greed. You have to be able to call it out, to name it in the moment. It's absolutely crucial. And once you've made the diagnosis, you execute the protocol. No thinking, no debating. It's a pre-written script. Fear hits code red, bam, you hit the emergency brake. Step away, breathe, assess. Is this real or is this just noise? Greed hits code yellow, bam. You raise the caution flag, you take some profits off the table, you remind yourself that trees don't grow to the sky. Having these pre-decided actions gives you just immense clarity.
So you know what I was waiting for yesterday to take profits on those shorts? I was waiting for the flush. There's always, whenever there's a crash like that in crypto, eventually there's always some type of a flush out. And it usually happens on like the 5-minute chart. Like you zoom all the way in and you'll see, and we saw it in chart after chart yesterday, when everything was crashing, where you'll see a really sharp, like a 5, 10, or 15-minute period of time where it's just straight down. It'll be straight down like 5, 10, 15% in like a 15-minute period of time. So I call it the flush. And then after the flush, that's the end of the dip. That's the end. Then the bounce comes in. And we saw that in just about every crypto, last night. And then the bounce has continued in today. So that's what I was waiting for. And I already had that pre-committed because I've seen that pattern so many times during these crashes where when the flush comes, that's the end of the dip. And I wish that I would have actually listened to my system and exited on the flush out. I exited on the bounce back up because, hey, I still fall for those emotional pitfalls still. So yeah, writing that stuff down though and documenting it for yourself, that is the first step in the right direction. But sticking to it and being disciplined enough to stick to it in the moment, that's still really tough, really tough.
When your brain is screaming at you. And this right here, this quote from the legendary Mark Douglas, this is the ultimate mental antidote to both fear and greed. I mean, really let this sink in. An edge is just a higher probability. It's not a crystal ball. So when you lose, it's not you failing. It's just statistics. It's the other side of the coin landing. And when you win, it's not because you're a genius. It's because your edge played out. This idea, if you truly get it, it strips all the power away from fear and greed. Okay, so now you've got the tools, you've got the playbook. So how do we make this stuff automatic? How do we turn discipline into a habit? Look, mastery doesn't happen overnight. It's a process, but you can absolutely systemize it. Think of this as a 21-day boot camp for your trading brain. In week 1, you're just on reconnaissance. You're just observing, taking notes. Week 2, you're a detective. You're finding the patterns, your personal triggers. And by week 3, you're integrating. You're running the drills until the response is automatic. You're building that crucial muscle memory for discipline.
And so this process actually takes about 70 days or so to build a new habit. But this part right here, identifying your top 3 triggers and creating response protocols, this is really, really valuable because it's going to be different for each individual. So you have to really do this for yourself. No one can just kind of give you a trading system or an investment system. It's got to work for you because, you know, the level of risk that I might be comfortable taking might be much too little for you, or maybe it's much too much. You know, it really depends.
Well, really quick, Rich, if you're interested, this is part of DeFi University. This is the a free, free DeFi course from beginner all the way through advanced that David offers for free, all of it for free. And if you're interested, there's a link down in the description that will take you to it. And again, it's all free. So we're basically, he just finished up the DeFi High is what we're calling it, or what he's calling it. And then DeFi University is his intermediate and advanced course. But yeah, I mean, basically all we're doing is going through the lessons and doing it in an instructor style. So, we'll pause it every once in a while and kind of, go more in depth and, but you can go through this at your own pace, on DeFi University and do the quizzes and, there's all kinds of tools. There's, all kinds of things. So check that out.
Yeah, so it's the university is a set of courses, and all of these courses are free. It's at courses.defiuniversity.xyz, and there are also, I turn these into books too. So if you would prefer to like have a physical book, like a paperback that you can use, well, there are books for that too. Let's see here. So I think I just completely left off. Let me.
All right, let's be real. If you're a trader, you know that feeling.
I want to bring it back to the section that we were at. I think it was right around here somewhere. A little bit further, maybe like right here or so. Yeah.
Now you've got the tools, you've got the playbook. So how do we make this stuff automatic? How do we turn discipline into a habit? Look, mastery doesn't happen overnight. It's a process, but you can absolutely systemize it. Think of this as a 21-day boot camp for your trading brain. In week 1, you're just on reconnaissance. You're just observing, taking notes. Week 2, you're a detective. You're finding the patterns, your personal triggers. And by week 3, you're integrating. You're running the drills until the response is automatic. You're building that crucial muscle memory for discipline.
So what's the goal here? What does success actually look like? It's this. A trade moves against you. You feel that familiar spike of fear, but instead of your hand immediately flying to the mouse to close the position, a different thought fires off. A calm, automatic thought that says, interesting, fear is at a 7. Let me check my protocol. That's
Okay, so what it's talking about here with fear, making you want to immediately take the wrong action, and then the slow, calm, unemotional brain saying, hey, why don't I check my protocol first? So this is the difference between that fast emotional system 1 that relies purely on emotions and the slow and logical system 2 that relies only on your disciplined logical system that you created before you had an opportunity to get all emotional. So those are the two systems. You got that slow system 2 and the fast system 1. That fast system 1 is relying on emotions. It's always going to make mistakes. That slow logical system 2 relies on your thinking brain, and it is much more disciplined, less likely to make mistakes, but also that's where you get your edge from. You get your edge from this. You don't get your edge from the fear and the greed. So yeah, just being able to split these two apart. If you want to read about this, take a look at Daniel Kahneman's Thinking Fast and Slow. That's part of the source material for this course.
That's it. The emotion becomes a simple trigger for a logical action, not an impulse. You know, at the end of the day, it really comes down to this. The market is a very expensive place to find out who you are. So many traders pay a fortune in losses just to learn hard lessons about their own lack of discipline.
Yeah, we call that market tuition.
Yes.
Yeah, you want to avoid paying market tuition as much as you possibly can, but you got to be able to accept that everyone pays market tuition at some point. It's just the cost of being a trader. You're not going to win every single time, you know.
You just need to focus on winning more than you lose.
Yeah, you know, and some people can lose more than they win, but their winners are much bigger than their losers.
Yeah.
So that's the that's the rare trader who's able to succeed like that. But because think about it, if you lose 7 out of 10 times, but your winners are 10 times bigger than your losers, then net you're profitable. But dude, think about how taxing emotionally that must be to have strings of like 7 losing trades in a row, where it's just loser after loser after loser. It's like, and then finally, all of a sudden you hit a home run. Man, that is not a trading style that would work for me, but it works for some people, you know? So you've got to figure out what works for you. And the only way that you can figure that out is by failing. You got to fail as fast as you can, as many times as you can, and you got to learn your body and your emotions, because your emotions are data. They're going to tell you, yeah.
Well, I was just going to say, when you first start out, make sure that you're using, very small amounts. Bet small, lose small. Don't come right out the gate with trading, in DeFi and putting large amounts of your portfolio in. It's better to make sure that you can learn lessons and even paper trade. It's where you're not actually using real money. That's a great way to learn.
Absolutely.
It's basically an imaginary portfolio. Maybe they'll give you like $10,000 and it follows the actual market. It calculates it as if you do leverage and stuff like that. It's just basically like playing Monopoly. You're just using, fake money, but it allows you to test, a lot of your strategies and things like that without actually using your own money.
Yeah, I actually think that you need to use real money, because
Well, eventually, yes, because you need to inject the emotional part of it.
right, exactly. If you're paper trading, you don't really get that.
No.
But what the guys over at Tasty Trade used to say, Tom Sosnoff and Tony Batista, they would say, trade small, trade often. And I totally agree with that. But also in crypto and DeFi, stay away from leverage, especially at first. It's so easy to go on to some of these perps DEXs, and you can trade with 100 or 1,000x leverage, which is just crazy. Okay, so even 10x leverage is a crazy amount of leverage. Even 5x, even 3x. Okay, like you don't need 3x leverage when these underlying crypto assets have like 90% volatility. So like you don't need that leverage. You can use 1.5x and do just fine. So stay away from the leverage at first until you start to learn your emotions and what your body tells you about taking risk. And then, you got to start building a system that works for you, for your mind and for your body. So
This whole system, it flips that script. It's about knowing yourself first so you can trade second. It's about taking control of the one thing you actually can control, you.
So I want to leave you with a direct challenge. What is your #1 emotional landmark?
So this is why you don't use leverage, especially when you're just getting started. So you will not be able to learn yourself if you're using 5x leverage on an altcoin and you're trading that altcoin, because when you're wrong and you're using even 5x leverage, small moves make your P&L swing wildly, like really fast. And so that's going to mess with your brain. That's going to mess with your emotions. You won't be able to learn yourself because that leverage is like breaking the feedback loop. You need more time. And so to give yourself more time, just don't use the leverage. If you absolutely must use leverage, try using 1.2x leverage, okay? Like don't go to 5 or 10 or 20. Try 1.2 at first.
So, I want to leave you with a direct challenge. What is your number one emotional landmine? Is it FOMO? Is it revenge trading? Is it the fear of being wrong? I want you to name it right now, and then write down one simple if-then rule, your protocol. If I feel X, then I will do Y. That simple act is your first real step on the path to mastery.
Okay, so let's run through this real quick. What is your number one emotional trigger and what is your protocol? So for me, my number one emotional trigger is FOMO. And FOMO can happen for me on the way up or on the way down. And this is what it looks like. It looks like me seeing a move out of a stock or a crypto or whatever, a commodity, some asset. I see a move that I thought that I had predicted, but I didn't enter the position. And now I'm just stuck watching it move in my favor, but I have no money on the line. It's just imaginary money. And so those imaginary not gains feel like losses. It's weird,
Yeah,
you
I
know?
can see that. I can see that.
Yeah.
Like the not necessarily the fear of missing out, but the realization that in the emotional response of actually missing out.
Yeah, yeah, man. It's really, really weird. And later on in this investor mindset course, it describes that exactly what I just mentioned there. Where imaginary gains that you don't have can kind of sort of feel like losses. It's not.
Well, and you have to ground yourself. You have to realize that, yeah, of course, hindsight's 2020. You can also do the same thing to where, yeah, I was going to enter into that and it went against me. I dodged a bullet. I didn't, realize those losses either. So it can go either way, but yeah, it's, of course you're going to remember, the chances that you missed, for profit a lot more than the ones that you missed where you would have lost.
Yeah,
So,
the funny thing about that though, Mike, is missing out on imaginary gains feels worse than avoiding imaginary losses. Like it's so weird, man. So that's basically my number one emotional trigger is seeing a market move and feeling like FOMO from imaginary not gains. And then what's my protocol for that? My protocol is to sit and nothing. That's the
mhm.
protocol. And maybe journal.
That
Like
honestly, that's powerful. Having the discipline to be able to sit on your hands and do nothing. Like there's actually a
that's
lot
exactly
of
what I'm doing, man.
well,
Like
there's a
right
lot
now.
of people out there that there's a lot of wisdom out there where and back tested data of some of the most successful traders and investors are they made the majority of their money just simply having the discipline to buy and do nothing long term.
It's not easy. It's not easy. Sometimes the most difficult thing is to enter a position and then sit on your hands. Like that is not easy, man. Not easy. So now that we've gone through lesson three, managing fear and greed, what big bounce, Bitcoin at 71, ETH at 2080, Sol at 88. XRP has had a monster bounce, at $1.50, Monero at 333, Sui at $1. So big bounces coming in. Stock market ripping higher. NASDAQ plus 1.6%, S&P plus 1.5%. So big moves. So yesterday we saw, fear. And today we're seeing this bounce. So we're seeing greed. So let's think about, what type of cognitive biases might we be suffering from? Or maybe we can think about the psychology of risk management. I think that might be interesting. Or, I'm just thinking about which lesson do I want to go to here? Um, let's see here. Market psychology, elite traders' mental game. Let's take a look at, maybe not this one. I don't know. What do you think, Mike? Building your foundational habits, habits of excellence.
I'm big on building building knowledge, building anything from the ground up. Let's go with the foundational knowledge.
Awesome. So building
Because
your foundational
if you build
habits.
anything and you don't have a solid foundation, then it's not it's not solid. So,
Awesome, man.
yeah, with physical, mental, anything, there needs to be a foundation. There needs to be structure. Without that, it's like building a house of cards on a moving train. It's just going to bounce around and eventually it's going to fall.
Let's see what this is all about. This is probably a lot of it borrowed from Jesse Livermore. So this is going to be great. Let's hit play.
All right, welcome back. Today we're going to talk about something huge, building a blueprint for real elite performance. We're diving deep into the habits of excellence for traders.
Okay, let's just jump right in with a pretty wild question. What if you could become, get this, 37 times better as a trader in just 1 year? I'm not talking about 37%, I mean 37x better. How is that even possible?
Yeah, I know, it sounds completely impossible, right? Like some kind of marketing gimmick, but it's not. The whole idea, the whole secret, really, boils down to something super simple. Just getting 1% better every single day.
So that brings us to our first big
In
idea.
100 days, you're 100% right all the time.
Right? 100% of the time, it works 60% of the time.
Yeah. What is that? Sex pen?
Yeah.
60% of the time, it works
It
every
works
time.
100.
Game of trading. And this is all about a massive mindset shift. It's about stop chasing those lottery ticket trades, the one big win you think will solve everything, and instead getting serious about building consistent, reliable systems that give you an edge over the long haul.
So the single biggest change to my trading system that has really worked is not trying to hit a home run and instead scaling the size down significantly and removing all leverage. So
Yeah.
by not trying to hit a home run, by scaling down the size and by not using leverage, those three things have really, and thinking about things, instead of thinking about things in percentage terms, I think about them in basis points. So, much, much smaller.
So basically, you're mitigating greed.
Look, it's working. That's exactly right. Yeah, it's working really, really well.
Yeah.
And the engine that drives this whole thing, it's the compound effect. You've probably heard of it. It's the idea that
So rather than trying to hit a home run on every trade that suddenly generates this life-changing sum, instead of that, if I just focus on, hey, you know what? I'd really like to do 150 basis points this week. If I just focus on that goal over the course of 1 week, 150 basis points a week is like 50% a year. That's a phenomenal result. And it's just a matter of, being a little bit more disciplined and not trying to swing for the fences anymore and letting things compound.
these tiny daily improvements, they don't just add up. They multiply. They build on each other, creating these huge exponential results over time. This is how you build a real statistical edge. It's the secret sauce of the pros, for sure. So remember that crazy question I asked at the beginning? Well, here's the answer. That number you're looking at, 37.78, that is the cold, hard math of what happens when you improve by just 1% every single day for a year. It's just 1.01 to the power of 365. The math doesn't lie. It's pretty mind-blowing. And this really gets to the heart of it all. The legendary trader Jesse Livermore said it best. He figured out that the real game wasn't trying to outsmart the market. No way. It was about mastering himself, conquering his own impulses, right? The FOMO, the revenge trading, all that greed. That's the
Discipline.
real battle. So excellence in trading, it's an inside job. It's a game of self-mastery.
That's exactly right. It's 80% internal, 20% external. And,
True of a lot of things, dude.
Yeah.
I mean,
Yeah.
like in the military, a lot of the hardest courses that I went through, it's actually taught that, it's a lot of people just think it's physical. It's, you have to, with all the ruck marching and lack of sleep and, stuff like that, they think it's, the big jock, that shows up that everybody thinks is going to, crush the course. They end up, opting out, after a couple of days, and that skinny kid that, got picked on for years that, is just fucking bulletproof when it comes to being resilient and being disciplined and focused. And he ends up fucking crushing the course, because it's 80% mental. the majority of, a lot of, being able to conquer a lot of this stuff, to being successful in life and in relationships and everything. The foundation of it all is solid self-discipline.
Yeah.
If you're able to have solid self-discipline and, and able to, over your emotions and, things like that, it's almost limitless what you can accomplish.
Yeah, man, I could use some of those limitless pills. What was the stuff that those guys were taking? It
I know,
seemed
right?
like,
I
you know,
well, I think a lot of people are taking I think a lot of people were taking that Adderall or something like that.
oh, dude. Oh, yeah, I'd be up the walls, man. That's
I mean, that's artificial. It's like, if you can anything that you can do that's, purely natural. Yes, is it harder? Absolutely. But, you know, pain and, pushing yourself out of your comfort zone and things like that, that's what builds, lasting lessons. That's what builds, discipline. That's going to stay with you your whole life.
so, Mike. You know why these lessons from Jesse Livermore have lasted 100 years? Because he wrote this stuff in like 1920. Much of his early success in his trading career was in the 1910s and the 1920s. So that's 100 years ago. But the reason why it holds true today is because it's still just people trading these assets. It's still 80% internal, just like it was when he was trading. It doesn't matter if you're sitting in front of a screen and you're a screen trader, or if, like Livermore, you're at a bucket shop in Connecticut in 1915, trading with slips of paper. Okay. Like, it's the same thing. It's the same internal mental game.
Yeah.
Okay, so if it's all about mastering yourself, where do you even start? Well, that brings us to what we're calling the 4 pillars of profit. You can think of these as the big foundational categories where you absolutely have to build solid habits if you want any kind of lasting success. So these 4 pillars, they basically cover the entire life of a trade, from start to finish. First up, you've got your research and analysis. This is your homework, like having a solid 20-minute DeFi briefing every morning. Next is decision making. This is about having a rock-solid protocol before you put any money on the line. Then, when things get crazy and prices are moving, you need emotional regulation. This could be as simple as a quick micropause to stop yourself from making a stupid, impulsive mistake. And finally, the most important one for long-term growth, learning and adaptation. This means you have to document your mistakes. Turn those losses into lessons, not just, well, losses. All right, so now we know what habits to build. But the million-dollar question is, how do you actually make them stick? Well, that's what this next section is all about, architecting your trading habits. And we're going to use a super powerful but simple framework, the 4 laws of behavior change. This framework was made famous by James Clear in his book Atomic Habits, and it's basically your blueprint. If you want to build a good habit, you just have to engineer your process to make it obvious, make it attractive, make it easy, and make it satisfying. That's it. Let's break down how to actually do that.
Hmm.
Okay, let's take law number 2. Make it attractive. A great way to do this is something called temptation bundling. It's really simple. You just link something you have to do with something you want to do. So for example, after I finish my morning research, I get to scroll through crypto Twitter for 10 minutes. See how that works? You're tying an immediate reward to the disciplined work. Now for law 3, make it easy. The 2-minute rule is a total game changer here. The idea is to stop focusing on the giant habit and just shrink it down to a tiny 2-minute starting ritual. So your goal isn't do 30 minutes of research anymore. Nope. Your new goal is just open my research document. That's it. It just completely removes the friction and gets you past that initial inertia.
Baby
The part you just
Yeah. What do you think about this? Instead of like, what do you think about this way of starting a goal?
It's important. It's, a lot of the, the different instruction and, in training I've done in the military and otherwise, it's all about increments. If you try to do too much too soon, it's very overwhelming. So, being able to start out with, maybe it's just and that's why a lot of people talk about it. As soon as you get out of bed, simply making your bed, it's an accomplishment. It's a small, very small, but it's an accomplishment. and then you can build on that. It's like, okay, now, when I, after I make my bed, I'm going to get up and I'm going to, drink a glass of water. I'm going to take a shower, maybe I'm, not, I'm going to meditate. I'm going to, just whatever it is, just building that routine, that schedule. That is the foundation that I keep talking about, where everything needs a foundation. Once you can have that security, that to build on, then that's when you can start to expound. You can start to add to it. It's like, okay, I got this locked in, like it's talking about. I cracked open that research document. Okay, I got that down now. Now what's the next step? What's the next progression? It's that whole that what I was talking about with, how do you eat an elephant? One bite at a time. You're not going to eat the whole elephant all at once. It's the same thing with a lot of these tasks. Don't get overwhelmed. Just take it one step at a time. Push yourself out of your comfort zone a little bit, but not too far. But that's how you're going to make progress.
And don't give up.
Yeah.
Like once you get started, once you open your research document and you run into your first challenge, don't throw in the towel. Just say, and just quit right off the bat. A lot of people will get overwhelmed and then stop. And, you can't stop. You got to persevere. You got to push through that discomfort. That's how you grow, is by pushing through.
Don't want to start. And finally, law 4, make it satisfying. Our brains are wired to repeat things that feel good, right? So you need an immediate reward.
So this is super important. But what I find about like completing tasks is that it doesn't even matter what the task is. Like you were saying, Mike, it could be as simple as
you get an endorphin hit.
Exactly. You get a little endorphin hit, you get some dopamine, you get some endorphins, and you feel good about, hey, you know what? I accomplished that thing. It doesn't matter what that thing is. It could have been like, I made my bed or whatever.
Well, even having like a dry erase board with like, or something where you have like things that you check off, just that physical act of being like, check.
Yes.
It's weird, but just you do.
So
you
true.
get that, you get that endorphin hit that it's like, I accomplished that.
Dude, it really is, man. So what I do is I write down all the things that I want to do for a day or for a week or for a month. And then as I accomplish them, especially intraday, like during the day, I'll write something down in the morning. And then as I do that thing, I literally take my pen and I cross it off the list. And that act is
so
like
powerful.
It's so powerful, man. And
it makes you excited for the next one.
Exactly.
It's like you got a little gold star, it's like give yourself a little gold star.
And then you got to keep going, and that way, when you write everything down like that, you can break down really big, complex tasks into small, achievable chunks.
Yes. And that goes back to what I was talking about yesterday, with the milestones. If you have what seems to be an insurmountable goal, if you break it down into small bite-sized pieces with those milestones, you can accomplish the first step to achieving that. And then you get that endorphin hit. Okay, I've reached that milestone. If I'm trying to become a millionaire, I made my first $100. Check. All right, now I've made my first $1,000. Check. I've made my first $10,000. Check. And then it's, it doesn't seem like, because if you're just constantly looking at, I only have, $100, how am I going to become a millionaire with $100? It just feels impossible. But if you make a more achievable goal, then it keeps you focused. It doesn't seem like you're not making progress. So
yeah, and you know what the cool thing is about like that goal of I want to become a millionaire? Well, it's not just about the money. It's about the person that you become. All of those like self-help gurus like Tony Robbins and Jim Rohn and Earl Shoaff, those guys, they all talk about like, if you were given $1 million, like you won the lottery, you better hope that you become a millionaire quickly. Otherwise, you'll give back all the money, So you don't get to keep the money if you haven't become that person yet.
Mm-hmm.
So all of these little tiny goals, man, this is great. A daily habit checklist, you can apply this to trading. And, this is what it's saying here. So morning emotional scan, you might just do this automatically. pre-market research. I do this literally the moment that I wake up. I'm right there looking. I used a position calculator. Great.
Yep.
So I actually built a position calculator for myself. I call it the flight simulator. It's
Yeah.
totally free. Did you follow your entry rules? Well, you better hope that you did. Did you
Yeah.
journal everything? I actually built a journal into the flight simulator. Again,
Yeah.
totally free. The evening review. And we do this, I do this every single day now. I actually do this live. I review the day every single day live on YouTube, Twitch, or on YouTube, X, and Kick. So those three platforms, I go live every day and I review the day. And
Yeah.
then you got to reflect. And what I do is I reflect on trades that I executed yesterday, and trades that I executed last year, and trades that I executed 10 years ago. I'm always reflecting on this stuff in my own mind and just pulling out little nuggets of wisdom, saying like, oh, I remember, man, that options trade when I was long NASDAQ calls and it pumped and I didn't exit. I'm thinking about that now. And I realized, man, I really need to make sure that I follow my system next time. Like,
Yep.
and that could be from 10 years ago. It doesn't really matter when it was. It just matters that you extract a lesson from it. So,
Well, and that's the power of journaling. Or keeping a diary is, being able to write out your feelings, being able to write out, the experience while it's still fresh in your mind.
yep.
It's, the sooner the better, because if you can write that out, it's something that you can go back and reference because my cat just freaking
Oh,
lost it. Because over time, even, 10, 15, 20, 30 minutes after, the details start to fade. The finer points of, how you felt about something or, why you did something is going to start to fade. So it's so important. Like, if you, journal your dreams, as soon as you wake up, you need to do it right away because, as you wake up, that's going to start fading. So journaling is so important.
yeah. And you know what's weird about memory too is that if you wait too long, you can actually start making shit up, like
Yes.
inventing memories that, of things that never happened.
It's
Or
well
like,
documented, when it comes to eyewitnesses, for crimes and stuff like that. They're actually highly, highly, unreliable.
yeah, yeah. It's like, did you see the man in the black shirt crossing the street? And it turns out there was no man, there was no black shirt. He
Yeah,
didn't cross the street. You
yeah,
completely invented it in your mind.
yeah,
And you got to be careful when you're documenting your trades. Like, dude, do that as quickly as possible so that
yes,
you're not stuck the next day trying to remember what you did the day before.
yes,
List, maybe even with a little point system like this one, it gives you that little dopamine hit right away. Look, it's not really about the points, it's about seeing the progress. Ticking those boxes feels good, and that's what makes you want to show up and do it again tomorrow, especially on those days when the market gives you absolutely nothing back. Okay, this is where the rubber meets the road. We're going to put all of this together into a real actionable plan. This is our final section, your 66-day blueprint. This is how you take a habit from something you have to force yourself to do to something that just happens automatically. So, the research says it takes, on average, about 66 days for a new habit to become automatic. So, we're going to break this challenge down into 3 simple phases. For the first 22 days, your only job is to show up.
So that's actually really important. Like, just show up.
Well, it's like a job, if you don't show up, the rest of it doesn't matter.
Right? It's like, a lot of people think that, oh, I'm going to start doing all these things tomorrow. And then maybe you do that for one day,
That's
but
why most people fail.
yeah,
The New Year's resolutions. That's why most of them fail is, they've never worked out. They're like, I'm going to start going to the gym and I'm going to start doing, they start researching and doing all these workouts and diets and, all this stuff. And it's just too much too fast. And they get discouraged.
you just got to show up. That's all you got to
Yeah.
do at first is just show up.
That's it. Don't worry about being perfect, just be consistent. Then, in the next 22 days, you start to optimize. You improve the quality.
And by the final stretch, days 45 to 66, the habit should start to feel, well, automatic. It just
Natural.
becomes part of who you are.
Exactly. So if you want to become a trader or you want to be consistently profitable in DeFi as an operator, then eventually when you get to this habit part, then you don't even really have to think about it anymore. It's just something that you do. You
It's
have
instinctual.
assumed, yeah, man, you have assumed the identity of a professional trader or of a professional DeFi operator. That is who you are now because you've ingrained these habits and you're seeing consistent success. That's the goal.
Becomes part of who you are. But before you jump in, you have to know about the common traps, the places where everybody messes up. First, there's the perfectionism trap, waiting for the perfect moment that never comes. Then there's the motivation trap, thinking you need to feel good to trade well.
So you can't allow this to come into play at all. Like the way that you feel, like, man, you still need to show up and execute no matter what.
When really you just need a process. The all or nothing trap is a killer. You miss one day or have one bad trade and you just throw the whole system out the window.
Mm-mm.
The rule is never miss twice. And finally, the complexity trap. Trying to change everything all at once. Don't do it. Just pick one thing, master it, then move on. And that really brings us to the final, most important takeaway of this whole thing. It's this. You don't rise to the level of your goals. You fall to the level of your systems. Your success is never going to be about how big your dreams are. It's going to be about the daily habits you actually follow through on. So the only real question left is, what system are you going to start building today?
That's so cool. I really like that final point there. And Mike, why don't we do this in the last couple of seconds that we've got here before time? I want to share a different screen. I want to share just Bitcoin, just real quick, because this has been a monster move. Can you see the screen here, Mike? This trading view here.
Yep,
So,
yep.
so what I want to do is I want to zoom out, and I want to zoom out to a weekly here on Bitcoin. Now that was a historic crash that we saw, yesterday, all the way down to the 200-week moving average, just about. And notice where Bitcoin found support. Let me just go ahead and
On that
remove.
trend.
Yeah, there it is. There's the 200-week. And
Oh,
so
and
that, yeah, so I just removed the trend line, and the 200-week is right here. That's the level of support. But here's the problem, though. This is still, if I just go ahead and remove some of these drawn objects so that this is a bit cleaner. So resistance is at 75K now. That's resistance for BTC. But BTC also has this pretty ugly head and shoulders pattern right here. And that is a very bearish price action pattern. And so the fact that Bitcoin found support at the 200-week, okay, that's great. We're getting a nice bounce coming in today, plus 12.5%. Awesome. Resistance at 75, though. There's resistance right there. And it's only February 6th. So why does that matter? Why does the fact that it's February 6th matter? Well, because every Bitcoin bear cycle has lasted for around 11 or 12 months. So if you start the Bitcoin bear cycle from like October, November-ish timeframe, then that means we've got until October of this year. So that tells me that the trough is likely not in. The bottom is probably not in for Bitcoin yet. And I think that Bitcoin got rescued by the stock market today. So the stock market, even though the correlation there hasn't been all that positive over a longer period of time, when there's a big, sharp move, these things, the correlation goes to 1 for a brief period of time, where you'll see if there's a big inflow into the stock market or outflow, you'll see it reflected in Bitcoin, ETH, and Sol. They all trade together for a brief period. So this big bounce out of the NASDAQ, big bounce out of the S&P, I mean, that is a big bullish engulfing candle on the daily right there out of the S&P. And this is a daily here. So big bounces came into equities, and we're seeing Bitcoin bounce. We're seeing Ethereum bounce, and Ethereum is getting very close to resistance. So if we just zoom out, notice that was the Iran strike low right there. And we got the breakdown. Here's the bounce. Now this level, which was support, when it broke, it became resistance. So now ETH is very close to resistance. Now Solana, we can end on Solana here. Solana's pattern, I think, is more bearish than either Bitcoin or Ethereum, just because there's no real support here. Like Solana just decided, hey, 68 bucks, I'm going to hold 68. But I think better support for Solana is down here at 35 or so. So that means, and since I don't think that the bottom is in for Bitcoin yet, this bear cycle, then there's no way the bottom is in for Solana yet. So this is a really big bounce. This is a really big bullish hammer candle here. Yeah. Resistance above at 95. So I'm going to be thinking about opening, just reloading my shorts at 95 for Solana.
Think about loading your shorts.
And you want to talk about loading shorts, man. This XRP here, oh my goodness, what a bounce out of XRP. This is like the ultimate meme coin. So, at $1.77, I'm going to be reloading my shorts at $1.77 on XRP. Sui, if Sui can make it back up to $1.26, I will be very surprised. But if it can, I'm going to be reloading shorts at $1.26. And then I think we can just, end things with maybe like XMR, Monero, because all these privacy coins, XMR and Zcash, ZEC, they put in these monster moves, but big breakdown and breaking below the 200-day moving average. So I think that the 200-day is probably resistance. So 362. I might open some shorts on XMR at 362. So yeah, a lot of opportunity in markets. When you get this type of volatility, it creates opportunity, but don't use leverage. You don't need it. When these markets are putting in, plus or minus 12% moves each day, you don't need leverage, man. No. You don't need it, So I hope that was valuable for everyone.
Absolutely. Well, thank you for tuning in. I know, sometimes for a lot of you that this stuff, seems very basic and rudimentary, but, believe it or not, I mean, me and David have already run into a couple of things, the APR, APY thing. There's always something to learn. As soon as you think that you know everything, usually you're going to get hit, with a slap in the face, reminding you that you didn't know as much as you thought you did. So sometimes it's good to get back to the basics, kind of reset, kind of reassess, and, make sure that the foundation that, your, investing strategies and stuff like that, make sure that it's, still solid, make sure it's still up to date, make sure that nothing changed. So it's always good to revisit the basics, the fundamentals sometimes. So
100%.
With that, thank you, David, as always. And I hope you all have a great weekend. We'll have crypto and chill tonight. But other than that, we'll see you on Monday. Till next time.
Monday. Thanks, everyone.
Veteran Crypto out.